First of all, I would like to give you a quick summary of the capital increase through public offering effected in July 2018 for the first time in 3 years. For this capital increase through public offering, NIPPON REIT reformulated its characteristic and philosophy, creating NIPPON Vision to serve as the new identity of NIPPON REIT. This identity expresses the ideal structure we wish to create as a company, to create a robust portfolio focusing on demand and supply balance and diversification, while maintaining our investment discipline seriously, steadily, and solidly, and realize the potential value of real estate from our original viewpoint. Next, I would like to give you an explanation of the outline and the effects of this capital increase through public offering. Through this capital increase, NIPPON REIT acquired 21 properties, adding up to assets of 40.2 billion yen, expanding our total assets to 87 properties, with a total value of 247.9 billion yen. This measure strengthens our risk tolerance further by diversification of properties and tenants, at the same time still retaining average NOI yield and the NIPPON REIT's forte, which is a high proportion of medium-sized offices in the center of Tokyo in our portfolio. Moreover, in addition to the medium-sized offices in the center of Tokyo, this time we also expanded the number of residences we own in Tokyo, which has growth potential, thus increasing the growth possibility of our portfolio further. If you take a look at the asset size and the NAV transition since the listing, you will see that in about 3 years, starting from the 7th period, NIPPON REIT has steadily increased its NAV by internal growth of the properties acquired after the listing. We have shown with our track record that we can achieve substantial growth through the internal growth of properties acquired, of which we have ascertained potential for internal growth, and we shall put this growth cycle that we call positive cycle to good use in the future also, so you can expect further achievements from now on. Moreover, in connection with this expansion of our AUM, the aggregate market value of our investment equity has exceeded 150 billion yen, which opens possibilities for NIPPON REIT to be listed in the global index in the future, thus contributing to a further stabilization of the price of investment units. This is an overview of financial results for the 12th period. In the 12th period, operating revenue was 7,225 million yen, net income was 3,329 million yen, and DPU was 8,500 yen, exceeding the previous forecast of 8,387 yen by 113 yen. The increase is due to our success in maintaining a high occupancy rate, increasing rent, cost reduction measures, and measures to enhancement the profitability of the properties. For the 13th period, operating revenue is forecasted at 8,418 million yen, net income at 3,767 million yen, and DPU at 8,373 yen. For the 14th period, operating revenue is forecasted at 8,434 million yen, net income at 3,850 million yen, and DPU at 8,556 yen. The graph shows the transition of DPU. Since listing, we have been exceeding the forecasts in each and every period. Moreover, the NAV per investment unit as of the end of the 12th period was at 334,542 yen, grew about 35% in 4 years and a half, from the 247,275 yen as of the end of the 4th period. Here is the outline of external growth in the 12th period. During this period, we newly established 2 bridge funds, and in addition to 2 properties, 8.3 billion yen, for which we had acquired preferential negotiating rights from the sponsor, we newly acquired preferential negotiating rights for 3 properties of 6.9 billion yen. In addition, as of the end of the 12th period, we have a pipeline of a total of 16 properties with the value of 31.5 billion yen, that include the pipeline of 2 bridge funds NIPPON REIT owned as of the end of the previous period, and these were acquired by NIPPON REIT with the capital increase through public offering implemented in July 2018. NIPPON REIT shall continue acquisition of pipelines to ensure further external growth in the future. Next, I will discuss internal growth. We maintain a high occupancy rate of 99.5%. I believe that this is due to the tight supply and demand in the market for medium-sized offices, as well as the high risk tolerance of our portfolio. I will touch on the current situation with rent increase. First of all, the rent at the time of tenant change increased by 4.35 million yen in monthly terms. Also, we increased the rent of tenants whose contracts were renewed in the 12th period by 5.87 million yen in monthly terms, achieving the highest ever rent increase. Counting from the 7th period, NIPPON REIT increased the rent through contract renewals by 22,310,000 yen in monthly terms, 267 million yen in annual terms, and a quick calculation based on the total number of investment units after the capital increase through public offering implemented in July 2018, that is, 449,930 units, shows that the effect on the DPU is equivalent to 297 yen. This accomplishment is also clearly a result of one of the NIPPON REIT's unswerving acquisition discipline to focus on the growth potential of the properties. Now, please take a look at the trends in rent gaps showing our future growth potential. As of the end of the 12th period, the average rent of our office properties was 14,825 yen, while market rent was 16,082 yen. This means that the rent gap increased even further from the previous period to 7.81%. As NIPPON REIT acquired 8 new office properties in July 2018 through capital increase through public offering, the rent gap is expected to increase even further to 8.24%. We thus need to use this environment as a tailwind and continue to negotiate revisions to the rent increase. We shall also actively engage in engineering management, which is a measure to improve profitability by a method other than rent increase. In the 12th period, NIPPON REIT implemented measures equivalent to 31.28 million yen, and if we add to the total from the 7th period to the 12th period and the plan for the 13th period, expect an improvement in NOI of a total of 241 million yen in the span of 7 periods. If we make a quick calculation, similar to the one for the past rent increase, this shall result in an increase of DPU by 268 yen. This was made possible through strategic investment aimed at value enhancement led by our Engineering Management Office. This is a special characteristic of NIPPON REIT. Lastly, I would like to explain our financial status. As of the end of the 12th period, the balance of interest-bearing debt stood at 106,170 million yen, the long-term debt ratio and the fixed interest rate ratio at 97.9% and LTV at 46%. We will continue to control LTV in the range of approximately 45% to 50%. In the 12th period, NIPPON REIT issued its first ever investment corporation bonds to diversify the financing methods while cutting down the finance costs. Moreover, in accordance with our policy of gradually extending the terms of loans in consideration of finance costs in the 12th period, for an amount of 9.5 billion yen that matured in the 12th period, we implemented long-term refinancing, distributing the terms from 6 to 10 years. As a result, maintaining the level of the all-in finance cost, we extended the average borrowing period to the level of over 5 years, and the average remaining borrowing period was also extended to approximately 3 years.